All right, there we go, buddy. We are live. Hello, everyone. Welcome to today's live stream. Just let me get this all full screen and we'll just give people a minute or so to join in. Yeah, excellent. Welcome, Sean. Thanks for joining me today. Thanks for agreeing to go through one epic trade that you had with Semtech. I'm interested in learning more about everything that you went through. And I know it was both a financial roller coaster and also likely an emotional roller coaster as well. And I tried to get a picture like that for us here where you're entering in, you're all excited, you get what the heck just happened, and then the result near the end here. So let's jump in, but I'll give you a chance to give a quick introduction. And wouldn't you know, I have a slide just for you. Maybe you want to explain this and give a little introduction.
So you might be wondering why we're in the merry-go-round together. It wasn't because it was a date. We're actually brothers-in-law, so related by marriage. And he was a good dude. And I work as a real estate agent primarily. And I got introduced to stocks and CFD by Steve here. And it's all right.
Yeah, no, it's awesome. I was going through my phone trying to find a really good picture of you, and I was like, "Oh, hey, this is awesome!" And wouldn't you know, we're together. And I thought it was just kind of funny how we had our kids out for that day. Where they're probably in front of us or behind us on this merry-go-round, so to speak. And so we were just jumping in for the ride, and I thought, it'd be a good one to share with everyone. And I know that part of your Semtech trade has something to do with the wheel strategy. Interested in learning more about how that came about, and then we can talk about how you made some incredible money on that.
Yeah, for sure. You want to start?
All right. Let's start about the trade that started it all. How did you even come to hear about SMTC, and what was your thought going in?
So I had a dream. No, I'm just kidding. So there was a trader on CFU. I forget his name. Do you remember?
I think you're talking about Russ.
Yes, Russ. That's right. So Russ was like, hey, here's a few stocks that I like. And I took a look at SMTC and I was like, you know what? This looks like it could be an interesting company. So I put out a cash secured put for 10 contracts on SMTC. It wasn't like a huge price, but I wasn't necessarily expecting to get called. And I wasn't necessarily paying attention because I put a good to cancel on it instead of just a day, which I normally do. And so I was actually quite surprised when it got filled. And so I got filled at $18 and it immediately dropped right through to $13.50 or something like that.
Okay, so you entered in a cash secured put. The strike price was 18. It was likely trading something above that at the time, maybe in the 20s.
Yep.
And you went in with a good to cancel limit order of $1.25 for 10 contracts.
That's right.
Okay, great. And so coming into this, your effective cost base would have been $16.75 or something like that. And so even if it was trading at 20 or 21, you had a bit of a buffer and a bit of safety down to about $16.75 before you'd really be taking on a loss, if you will.
Yes, for sure. Yep, 100%.
All right, cool. And just we might have some viewers who are listening to this, and this is your first time trading with CFU. We don't recommend that you enter into trades with 10 contracts. We recommend that you come in with one contract. So Sean is a bit of a experienced trader with CFU, and so he's able to do larger trade accounts. It does show you that you can actually scale with the trades that we do recommend and share. So start at 1, and over time you can go up to 5, you can go up to 8, you can go up to 10 contracts. This wasn't Sean's first trade, and he's willing to take on the capital and the risk that he was exercising.
If you're trading I did 10 meta contracts, that'd be bonkers because you'd be taking on huge amounts of risk. But in this case, it was only $18,000 of capital. So it wasn't like this monstrosity of a trade.
Yeah, good point. Exactly. Okay, so this is what you entered in with. Now, let's go back just a little bit on exactly when this was, because here is 2026. SMTC is trading at the chart that I grabbed here was that you were trading at around $80 here. But when was this that you entered into the trade?
Oh, I'd have to go back. I think it's been a little more than 2 years since I actually got into the trade.
All right, let's bring this one up. Okay, so just going to load TradingView. If you're new to tradingview.com is likely the best charting software that is available. Fantastic for technical analysis. Right here, we're in 2026. Now rewind me on where did you end?
So it would have been that big drop down.
Okay, now there's multiple big drops down. When was that? Sorry, that was just my
Hard time seeing that here, but it should be just in that dip to the right. No,
no, this is 2025 through here. This
okay,
is 24.
Sorry, keep going back further. That's where the chart's like.
How about this here? 2023
Dollars where it dropped to 13 because that was the lowest spot right there.
Here's it at $20, and then the next day it's at 16.
That was it though. That was my entry point right there. And then so I filled during that gap, and then it carried down and settled out around 13 and then went from there.
Okay, so this is what you're looking at when you entered into this trade. So you're probably in something like around here. You put in that limit order. You forgot that it was a GTC, not a day order. And then all of a sudden you get an alert on your phone saying, hey, you got filled at $1.25 and we're now trading at $15. So out of the gate, you're like, oh, this is kind of a shit moment. And then it gets just worse as you go through. You're down into the $14. So that low of $13.50, that happened like a week or two after you entered in.
Thanks, Russ.
Yeah, right. So you would have been like a little. Were you angry at Russ at the time?
Oh no. I take responsibility for my own trades. Like if I see something, I'll take a look at it. Have some experience. Fine. Everybody has good calls and bad calls, but I was never mad. I'm just like, okay, well, how do I deal with it once I got in the shares? Because the worst thing that I can do that I've learned is panic and just hit it immediately.
Right. And we know that looking back at the story from hindsight here, for this trade, you made an incredible amount of premium, but you had an opportunity here to book the trade for a loss and walk away from this forever. But you dug in, you're like, no, I'm going to keep on going with this. What made you want to keep in?
I looked into tech a little bit further. They weren't making a ton of money. They were, in fact, in the negative, but they had some interesting strategies that I liked that I thought could pair, in the market. And so I'm just like, you know what? I'm okay to just kind of hang out. I didn't dollar cost average down further, out a little bit. And then as it started to come up to my premium, I started to sell covered calls on it.
Yeah, and that was my next question. So after you entered in, like, what was your next move? And so you said you started to sell some covered calls. When was that you started to sell the covered call? Was it during these first couple of leg ups?
Yeah. So you see that first peak that it came up to? Right about in there. I sold the covered call right about there. And most of the covered calls I sold were
for about $1 each.
Because I had 10 contracts, also $1,000 US, right? So I was pulling in a reasonable premium based on.
Yeah, you're getting like 5, 6, 7% on the cap.
Oh yeah, it was great. So I would just wait for a pop in that particular stock, and then it just seems to be a pullback immediately after, almost every single time. And it seems like right before I was ready to go, we would just kind of hold back. And then I'd wait. Once it expired worthless, I would sell it. It would expire worthless. And then I'd wait for the next one that came up on that next with another one there for roughly $1 again. And then it expired worthless. I just kept doing that over and over.
Great. Gotcha. Okay. And for those who are watching the live stream here with us, if you do have questions for Sean, you can drop them in the chat, just in the YouTube channel there, drop them in the chat as a comment, and we'll be able to bring those up and show them. And we can ask Sean here any questions that you might have, anything about his strategy, how he approached this, any struggles that potentially you have with selling covered calls and cash secured puts and wheeling the strategy. Wheeling the particular stock that you're trading, and we can ask him here live with you. Okay, so as we're going through this, so this looks like you're hitting these peaks here. You're selling covered calls on this. You're generating about $1 per share, but you're trading with 1,000 shares over 10 contracts, so that's $1,000 every month or so that you're coming into this. And so, yeah, these would have been fantastic peaks. Now, what happens when you get into this scenario here, where all of a sudden the stock rose very quickly and quite sharply?
I was just fortunate, honestly. I sold relatively short periods. And so one of the things that I liked that a bunch of the traders, especially you, did is you liked to trade shorter time frames. And so in certain scenarios,
Definitely.
so I would trade shorter scenarios, a little closer to money, but I would be careful when I sold calls because I was getting some premium. And I'm like, when the stock had risen back up, so I'm like, well, I just want this my cash cow moving forward. So if this thing just kind of has a sideways grind to it, I'm okay with that. So as it started to go rise, I just kind of left it. There was a bit of a time where I didn't do anything. I just let it go. When it really pushed, then I would only sell at that point. But there was a lot of sideways grind going on for a while.
Right. And what was the news through here? Because you're getting into the 30s, into the 40s through here. Like, what was the news? What were they saying that drove the stock up like this?
Can't remember exactly. It was just like there was a lot of push in everything. Like QQQ was exploding, like everything was just riding. There was speculation that their LOT platform was doing well. There were certain like metrics that they were kind of hitting, even though they weren't making a ton of money. There was some speculation that they were going to do good things, and the market in general was relatively bullish through that entire period. I think it benefited a strong market position, Rory, and the fact that people were betting on some of their systems coming through, even though they weren't.
You look through here, like they're just continually changing the structure, breaking up structure, and continuing to establish a bullish play right through. They didn't seem to ever have any bearish corrections on this at all. Good oscillation where guys would sell off to book out profits, but you're doing fantastic through here. Let's get back to what we had here on the slide deck. So we had some other questions that I wanted to get into. So generally through here, you're doing the wheel strategy for this. You had the opening cash secured put, you got assigned the shares, you sold some covered calls. Did the shares ever get called away from you during this intermediary period?
No, I never got them called away ever.
Once. Did you ever have to roll until the end? Yeah. Did you ever have to roll the position?
Never had to roll once.
Wow, so lucky.
Oh, so lucky. It was like,
man, you're like a unicorn trader, and you were choosing strikes that were tight to the market price.
yeah, and I got very lucky. I was very careful in the prices that I chose. I only traded once it hit like pretty big, and I got lucky to run through them.
And so this is one part of the wheeling strategy that we don't go into very often. But the first step here is sell the cash secured put. You get assigned the shares like Sean did right out of the gate. But then he stayed in this section of selling covered calls for more than 2 years, right? And so you were perpetually in this leg of the wheel strategy for a very long time. And then you got called away once at the very end. That was it. Like that was your.
And I could have rolled it if I wanted to. Looking back, I should have, but I chose to do something different, which I'm okay with. I'm happy with what my decision was. But
the last point that we wanted to have on this one here is that you can generate fantastic income using the wheel strategy. If I remember correctly, you entered into this with essentially $16.75 per share was your cost base that you started with, and you generated all of that and more through selling premium on the stock.
I
like
think
you got more.
$22 in premiums.
Isn't that nuts, right? So at the end, you're like, man, this stock owes me nothing.
Oh, it was like cash money. It was like 10 of the casino at that point.
Okay, so we went through this. We went through a little bit here of why Semtech. So it's an IoT leader, Internet of Things. And when I think of Internet of Things, I think of like cars are talking to one another and they're able to share data with each other. Is that the Internet of Things? Am I correct in understanding that?
I think so. If you ask too many technical questions, you're going to have to talk to somebody else. But yeah, generally that's what.
Here's an image of it where you got like different AI chips and broadcasts and Wi-Fi signals. They're all talking to one another. I don't know why a building would talk to each other, but it's just kind of the idea that things are able to communicate. I don't know if it's Bluetooth or if it's a Wi-Fi signal. I don't think the protocol truly matters, whether it's 5G or what, but I just really like that analogy maybe of a car talking to another car saying, hey, I need to get to the northwest section of the city and you're in my way. Can you slow down so I can get in, and then you can speed up and go around me? Stuff like that, right? Might have a good play with autonomous driving with Tesla. They might want to have, I've always wondered, right? Like, why can't my Tesla at least talk to another Tesla car? They seem to be everywhere anyways. It'd be great if my Model Y could talk to your Model Y and they could, match speed, avoid accidents. So there is a good upside to Internet of Things if cars, especially, or if other devices could talk to one another and help and collaborate. That's how I see it. So I can see how Semtech would have a bright future if any like Waymo or Tesla or any of the other autonomous robo taxis want to have some of this technology.
Well, they had good patents, they had good proprietary software, so those are good things that work for them.
Yeah. Right on. Cool. Okay, so this is your oh shit moment. Let's go back to that. Let's dig into what was the feeling and the emotion that you had at this? Because yes, it was euphoric at the end, but I think you had to go through the shitter first.
Yeah, it was. I'm a fairly calm guy. I don't get too rattled, but I was just like, oh, this is dumb. Like I bought 1,000 scaries of something that's gonna be like on a public run some money. The company itself wasn't that bad, but like it just was an initial feel. If you gaps down, you're right in the middle of that, laws down, and then you just regroup after, and you're like, okay, well, let's deal with it.
Okay, so but how you dealt with it, you started to hold the shares and then sell covered calls, and that was fantastic. But I think that's a really good lesson for all of us is good things follow bad things sometimes. And so when you get stuck into a situation, a trade's not working out the way that you want to, it's possible that in the short term, maybe even a month or 2 months from now, you'll be able to see some bright light and be able to book some profit here pretty soon on that. But you were down 25% on that. That's not an unusual drawdown for a position. You held through like a rock star, like a professional trader would be able to handle and continue to go through. Did you ever buy additional insurance to the downside? Did you ever buy a put to go along with your calls? Did you ever put a caller on?
No, but I did sell a couple of puts along the way as well.
So you doubled down. Not only did you not put on any hedge, you doubled down. You sold calls and you sold puts. So you are definitely a risk-on investor. It takes a lot to rattle you. And speaking from personal experience with you, I can agree to that. Like definitely you're always a very positive person. You always see you're very optimistic on what's going to happen. And it takes a lot to rattle you. I have tried to rattle you in the past, and I think I've given up. It's like, whatever. You always bring as I'll call you and you'll say, hey, sunshine, I was really down, but now my day's brighter. You have a very good personality and perspective on trading. So that does help.
Wherever you go, Steve.
Oh, yeah. Thank you. Okay. Let's keep going through. So market fear equals opportunity. And I think this is perfect here. So you're trading this at the end of 2023. 2023 was a very difficult year to trade stocks. This was also the year that CFU was basically in its infancy. We did start in 2022, and then 2023 was very difficult. It was hard for the CFU and for our trading platform to do well, but we weathered the storm, and you were able to weather the storm as well, too. Were there any other trades that you were doing at this time? Anything else you want to share with us?
Well, I did some bad trades too. So a little experience that I had with Steve here. We've been trading QQQ on QQQ.
Yes.
And at some point, I can't remember when it was, but I decided that it'd be a fantastic idea to sell SQCQ. And for those who don't know what that is a triple leverage stock to the downside on QQQ. Well, I didn't do so good on that, even though Steve's, why are you based on? And I wanted to stay in until I got out and the market turned off. It is what it is. But it was a really good lesson to figure out to not bet against the market in a longer term period. And so there was a few of those. I made some mistakes on selling some calls and puts that CFU didn't necessarily recommend, but I started calling tighter systems and things like that.
Yeah. I remember when you were doing this. I don't know what you were doing with SQQ. Weren't you selling? you were selling options against that position as well too. I was like, what? How does this work out? How do you make money on this when you're like? I forget what you were doing though exactly.
It's been a little bit now.
You were, I think you were selling cash secured puts against the SQQQ.
No, I
So
was like, I think I ended up owning it. No, that's
yeah.
right. Yes, I sold CSPs against SQQQ.
Yeah, and I'm like, well, that then you're yeah.
And then I started selling calls. So it's just like this weird mind meld, just crazy.
Yeah, you know, it's like even to this day, I'm like, you're shorting the short, so you want to go long, so then just go long. I'm like, ah, I couldn't get it through. I'm like, all right. But yeah, so I think that's an important part too. So during this time frame too, you're also learning on the side too and trying other positions. You weren't just focused on SMTC. This was part of your portfolio, and it became an ever increasing larger size of your portfolio as it ran from that $18, $16 range all the way up into the 77 range. So you learned a very cool lesson is that you took a losing position and you turned it into both an income stream and also an appreciating asset at the same time. That is very difficult to do. It's hard to also get income and also give that stock enough room to continue to grow too. So step us through this and how that was to have something multiply in its value, but also be able to pull income off it.
This SMTC was the largest position that I had that I've done this with, but it's not the first time I've done this. QQ is a good example. I've had it, turned it into a fit, but eventually got sold away. This one I held for a really long time. I think selling the calls.
Yeah. Okay. Yeah. And I think we should give a little bit of a nod or acknowledgement to the element of positive luck or good luck on this too. Like that does play a role, but yeah, I think overall you did have a good method of entering this, and it wasn't the only thing you were playing or that you were investing in. It did become an increasingly larger size, but you weren't just, you know, letting the dice roll on this one too. You were doing it with a strategic outlay and mindset for what you were doing.
Well, my account turned into something pretty significant. And it wasn't just his trade. It was a lot of the other things he was doing as well, right? This was helpful. It wasn't everything.
Exactly. And I like that last quote that you had there, that it was paying rent for you even at $13. And the analogy that you're sharing there with rent is the covered call income that you had coming in. So even at 13, you're getting some good premium. Take us through the grind that you had here, this 27 months. So this is a very long trade. It's likely longer than what most traders would be accustomed to or wanting to participate in. Step us through this. How did you do this for 27 months? Like, are you crazy? What's going on? How did you continue this?
Low trade.
Why did you not get out at $50? Why not get out at $40? What kept you in this?
I think because I had made so much appreciation on the underlying stocks. I only paid like 60 and 75 for the as an adjusted number. And so no matter what it did, I'm just like, well, let's see where this goes. And I got a little bit more bullish on it as it continued to go forward. You'll see if you look at the stock, it had a massive drop. Like it dropped down to like $23 from $60-ish.
Yeah, you got up to the 70 range and then it cratered again. So you came back and got punished twice for this. How did you hold on through this?
They were just still a negative earnings stock. Earnings came out and they dropped. I'm still in a decent position. I think there's more room to go on this. So I was just like, super patient. I basically did nothing for a while and I just held it. And then as it started to come up, I started to sell cash secured puts against it. I never got assigned anything. I wish I did, but I didn't get assigned on anything. As it started to increase in value, I started to sell some cash secured puts. It filled that gap coming up. And once it did, I basically never looked back and it just continued.
Yeah, that's insane. So coming through here, you have this massive gap down, the death cross right here where the 50-day moving average crosses the 200-day.
Yep.
I mean, you got every single reason to get out of this. You've got bear signals through here, and then it gets into this zone here. And this is actually a really good buying opportunity when you have the strong low get formed. And then through here, you have the golden cross get formed where it's like, okay, it's green light, it's bullish all the way through.
Yep.
And then look at that, just continues on. And then you would have sold, I think this is, you know, obviously for today, but you were selling probably around here is when you ultimately sold and got out of the position. Did you sell the shares outright or did you get them called away?
So I got them called away, had to make a decision on it because I sold a set. So the last call that I sold on was a $65 call. I sold it for $6, which is ridiculous considering I have a $16.75. Like, that's why I felt like it was like playing with house money. If it gets called away, I'm going to let it go. And then I'm going to use those shares for other things. Because just based on the last trade, I'm like, okay, well, I sold it for 75, the call. I got a $6 premium. I'm essentially at $81 to exit that stock. I'm really okay with that. Like, and that's nearing like the top end for that stock, even historically of what it sold for. So I was just very comfortable letting it go. So I could have bought it back for $2.75. I chose not to, and I just let it go.
Yeah, that's awesome. And then, like, I don't know if you were playing it like this, but you bought, essentially, you held through here. You're selling some cash secured puts. This was the great time to buy right here. And then you sold right at the best time to be selling. So congrats, man. You kept on selling cash secured puts. You kept on selling covered calls, and you made a handsome sum in premium. And then you sold right at the best time. This is a fantastic pattern, and congratulations on a fantastic stock trade there. I just want to go through the real numbers here. So just taking everything into summation, this is the SMT trade that you did. You entered in at $18. You got $1.25 in premium. That makes your effective cost base $16.75. You stood through two massive drawdowns selling, and then during this time frame, you sold covered calls and cash secured puts. Your maximum drawdown count all the way down to $13.43. You let your shares get called away at $77.50, and you collected $22.50 in premium. Is that an accurate summation of your trade? And here's kind of the chart that goes along with it, with your entry, your bottom, your recovery phase, and your ultimate exit at the end. What's incredible about this is you end up having a 455% return on the capital that you put in. You put in $18,000 and you booked in, I don't have the precise number of this, I've had it in my calculator on the side, but your option premium was $22.50. You had 100% return based on premium collection, more than 100%.
And actually, what I forgot about when I did that, I forgot about the puts that I sold. So those are just calls.
Don't tell your accountant that. It's just $22.50 total per year. This is live, and he only ever made $22.50 in premium. I don't know what you're talking about with them cash gear puts, but this is incredible. And like, it's easy to do. Maybe I have a little assumption here. It's easy to do this when you're trading one contract, when you're trading 100 shares. But you did this with 10 contracts and 1,000 shares. And I know you said, well, it wasn't that big of a deal with $18,000. I gotcha. But when you're getting through and it's $50 a share, now you're playing with 50 grand. When you're getting to $75 a share, now you're playing with 75 grand. The number may have started small, but you continued to see it through to the end. Another way to look at this too is if you had started at $18 and just rode it all the way up to $77.56, you still would have made a handsome sum in terms of just a buy and hold. But adding and layering on the selling of calls and puts boosted your overall return significantly. In fact, it eclipsed your original investment price. So just a buy and hold is good. That was a fantastic trade, 18 to 77.56. But layering on calls and puts boosted the overall trade, or campaign, if you will, of your SMTC campaign of trading. You made even more by adding in selling.
Yeah. There were a couple times where I got really close on the cash goods at the bottom. Another contract, I think. And so I look back and been like, oh man, that'd have been super nice to have that pull through. But it is what it is.
Okay, now as we get to the end of today's live stream, anyone who's watching, if you do have any questions, now would be a great time to submit them. We'll pull them up and answer them live with Sean. If you're listening to the recording or watching the video after, just drop those comments in as well. We will be able to answer them for you. All right, now tell us about your next big trade that you're going into, and it has something to do with Broadcom.
Okay. So one of the reasons I allowed my shares to get called away is I did a trade with CFU. I followed one of the trades, and it was a spread trade. So basically just meaning that Broadcom had a significant drawdown just recently from their high, and I'm like, Broadcom's a good company. I am okay to hold Broadcom because I think there'll be a recovery. And so what I did is I basically sold my protective put at the bottom and got all the cash for that. And then now I'm just riding up Broadcom. I let my SMT shares go and basically rolled that into my Broadcom share.
Oh, awesome. So you entered into the put credit spread that we had recommended for Broadcom. And then as it went down and maybe crossed that strike, you're like, well, this is an opportunity for me to sell that protective put that composes the second leg of the put credit spread.
Mhm.
And that gave you a good inflow of additional capital to then lower your cost base even further. I like that.
One of the reasons I did it is because one, Broadcom returns crazy premiums. They're a very solid company. They have huge income. They're solid. They've been around forever. So I'm like, when they drew down that much, I was like, hey, look, I'm going to sell this thing. And it was a good decision.
Yeah, amazing. Yeah. And I know what trade you're talking about with the put credit spread that we put on Broadcom, because we're still holding that as a campaign and we're currently in the 280 over 260 put credit spread on Broadcom. So we've had to roll it a few more times because we have a bit of a different angle that you've now taken on with Broadcom, where we have to get that trade into profitability and exit. But that's another benefit that you get with CFU is you can enter our trades with us and you don't have to follow it lockstep. You can go and break off and go down a different path if you want to, if you're comfortable with. And you can rely on our analysis and the homework that we do. Let us do the heavy lifting for you to spot opportunities and jump in on a trade. Like, for example, today we did an in the money covered call on Marathon Mining. Some members hadn't known that Marathon's dropped from $20 all the way down to below $10. And so that's part of our scanners that we have looking for great trades and opportunities. We picked up on that and we're safe down to 850 on this. And we still get to have 160% total return on that trade if it goes on an annualized basis. So that's part of the value that we bring with CFU is that we can spot opportunities that perhaps you wouldn't be able to find on your own.
Well, and without CFU, I wouldn't have traded Broadcom in the first place.
Yeah, exactly. And maybe you wouldn't have traded SMTC.
Definitely.
Like, kudos to Russ on that to find that one for sure. Okay, let's get into the spiciest thing we can share today, Sean, your brokerage account. So before the SMTC trade, you're at $118,000. Step us through this. This is your brokerage account. I don't want to steal your thunder.
Yeah. So I had a fairly good return, and that's even with making mistakes. I didn't take any massive risks, but I just kind of managed, got assigned a few times, did some good shares, did some good trading with Tesla and QQQ and a bunch of other things that CFU recommended. That's my account. It's actually a little higher than mine now.
That's awesome. So this is the results of probably 2 or 3 awesome trades, but along the way you had some mistakes that were made. And despite those mistakes, you were still able to take an account of 120,000 and get that all the way up to 280,000. And like you just said, you've even got above that. Have you crossed 300,000? Close. So like 299,000. Hey, that's amazing. Good job. But, a total return of using the math that we have here in front of us, 137% return, and that's in 2 years. So really, you doubled an account, and it's not a small account. You doubled an account of that size in 2 years. So congrats to you. That's an amazing return and performance on your account. And I mean, that's why you can have a tremendous impact on your portfolio. And we can see that right here, plain as day, right in front of us.
Yeah, no, it was fun.
All right. If you're interested in learning how to trade options similar to the way that Sean trades options, we do have a way for you to start trading with us. We have a 3-element starter kit for you. It's an ebook, a scanner, and membership to our Discord community. If you go to joincfu.com/starter-kit, again, joincfu.com/starter kit, the ebook will outline an income strategy. It's very effective. Our members use it and they get phenomenal results. That's a 30-page ebook available for you for free. The scanner is our PCS 100 scanner, which will find and mark put credit spreads for you And our CFU Discord is membership in there. We have over 1,000 members that are in there trading actively with us. And yes, it's true, you will have limited access. You won't be able to see all of our channels or our premium trade alerts, but you will get 1 to 2 free trades each month and access to some fun channels that you can talk and discuss and become a better trader there. Then when you're ready to take the leap, join as a full member and we'll bring you in and we'll share you all of our awesome trades that we're making, like the marathon mining that we had today. And we also closed off Budweiser. That's a crazy stock, right? But we made a 30% return on that. And we also closed off our short position on silver. We made a 33% return on silver, shorting that for the last, it was 14 days. So yeah, we had to bear through a nice spike on silver, but today with silver cratering, we made a great return on that. So if that interests you, if you want to join our community, come make some money with us, go over to joincfu.com and make sure you click on the free starter kit up at the top and grab that kit. Okay, to close this off, Sean, what was this all about in the end?
Making the monies.
Yes, trade the system, not your feelings. And I think this is a fantastic example for us all. Is you traded a system, you traded a methodology, you traded a stock that you were confident in. You did not let your emotions get the better of you. And I love it how you went through not once, but 2 incredibly large drawdowns on SMTC. You stuck to it, you stuck to your method, and in the end, you had a 455% total return. And just how much the options boosted your total return on that. Anything you want to share with us before we close off here today?
I think if anyone's listening, you might think that this is unreasonable or unrealistic, but if you manage, you might not get a 455% return on something. And I hope I got something else going to get a 455% return. But I think if you just manage your trading, do it smartly, pick good stocks, and you have a community that can support you, you can do good things. Stock market seems scary, but it doesn't seem that scary anymore. Even if there's big drawdowns, the market always recovers.
I love it. And I like that you closed off there with, the stock market can feel scary, but over time, as you trade, you get used to it. You're in with a community that can help and support you. Thanks for being with us today, Sean. Thanks for opening up your book, letting us have a peek inside and sharing your story here with how you traded and came out immensely successful with trading SMTC. Thanks.
Okay, bye.